You get spiked out of your trade. Well, in this video, I'm going to go through the fundamentals and the key aspects of trading that a lot of traders do not implement to their day-to-day strategy. So yeah, in this video, we're going to go through fundamentals you need to apply, certain parts of trading that are very, very imperative to your day-to-day strategy. Without further ado, let's get into today's video. So like I said, this video is going to be a video where I'm going to showcase in some key fundamentals you need to add to your trading. Obviously, a lot of traders tend to focus on the technical side of things, which is really, really good because obviously you do need both your technicals and your fundamentals to be a profitable and a consistent trader in the market. However, a lot of traders tend to not focus as much or put as much attention to fundamentals. So like I said, we're going to go through some fundamentals. So as you can see here, the first website on that I tend to use for my fundamental analysis is Forex Factory. Essentially what this website is basically gives you a breakdown of all the key news and key fundamentals that are happening in that current week or that current day you're trading, for example. So as you can see, this is a fundamental news for the week of June 8th to June 14th. So we can see Monday, Tuesday, there were no fundamental news. So usually what that means is that price action wouldn't be influenced by political news, by maybe let's say a government, who has an influence in the market speaking, for example, President Trump with his tariffs. Usually that would influence price action or would sort of cause your trade to go against you. So by having these fundamentals and knowing about these things, it can help you avoid your trade getting spiked out because of Trump saying the wrong thing, or he's coming out with a statement or an interest rate or something like that can affect price action in the market as well. So like I said, so this is one of my favorite fundamentals or websites that I use to sort of keep up with the market and sort of getting ahead of what kind of news I'm expecting and how that would influence the currencies and pairs that I trade. So as we can see on Wednesday, we had the CPI, which essentially is the inflation rate for the US dollar. And I think this is looking at the month to month and the year on year as well. So essentially what this index does is basically tracks in terms of the price of goods and services, an average price for the US for whether comparing for like May to June, which is the month to month. And obviously the core CPI and the CPI are two completely different. One of them is excluding food and energy. So which is why a lot of traders tend to pay more attention to the core CPI, because this is one of the key indicators or key fundamentals that tend to showcase how the US economy, in terms of have they grown in terms of inflation expectation, and how traders are reacting to these news as well. So these are the few things that we as traders you need to know. Obviously you don't have to understand fully what all these things are, but having an idea what these news does to the market is very, very important for you to know as well. So we can see that the news came in for CPI, and so as you can see there are three different columns here. So there's actual, forecast and previous. So usually what the actual is basically what's the news that's came in for that period. Forecast is basically what's expected from traders that they've priced in the market, and obviously previous is basically the last results that came in, whether it's the last year, the previous month, or the previous year, wherever the dates is as well. So yeah, we can see, so these are the few things that you need to pay attention to as a trader, and by implementing these fundamentals is really, really important so you can get an idea of what's going on in the market as well. So we can see the news came in and it did not beat the forecast. So for example, we see CPI came in just a percentage under the forecast. So the forecast was for 2.5%. However, the actuals came in of 2.4%. So what that usually means that when actuals fails to beat the forecast, obviously that's a negative to the US dollar. So which would really mean that prices would plummet for the US dollar index, whereas the Nasdaq, gold and pound would obviously go up in price, because again, when you're trading Forex, usually you're trading two currency pairs. So let's say that the main currency list will be pound against the US dollar, or the euro against the US dollar. So if a news comes out and is negative against the US dollar, what then happens is that on the euro to the pound and price, euro will go up as the dollar will decrease based on the fundamental news that's come out for that currency. And obviously it's the vice versa as well. For if the euro news came out negative, it would then affect the price of the euro, reducing the prices, and therefore would then increase the value of the US dollar. So that's how applying these fundamentals can help with your day-to-day trading as well. The second one that a lot of traders tend to know is the COT report. Essentially what the COT report is basically, even though it is a lagged fundamental aspect, it's still quite a good fundamental that you can use to add to your trading confidence as well. So basically what the CO2 report is that it breaks down and it shows what the institutional traders are basically, essentially the market makers are doing in the market. So this report comes out every Tuesday and it basically showcases what traders are doing in the markets. For example, I can show an example quickly. So we can see the Australian dollar. So let's go ahead and see what has happened for the CO2 report. So usually the part that I focus on the CO2 report is the non-commercial traders. So the non-commercial traders are the traders that are actually in the market to make profits, whereas the commercial and other kind of traders tend to use the market as a hedging and risking, which is another part of trading that I don't want to get involved because that's more complex and stuff. But the non-commercial, essentially what that means is that these are trades that have been taken by people with big positions in the market, brokers or institutions that obviously are in it to make a revenue, make money from the position. So therefore they do tend to control the market and they do have influence in price as well. So we can see the Australian dollar. So I think this CO2 report is off as the 3rd of June. So I believe the next report should be coming in maybe sometime today or tomorrow. So we can see so far there has been an increase in longs trades. I'm sorry, in a short trade of 4,000 trades and an increase in shorts of 2,000 trades as well. But overall, there are more shorts than longs, which tells me that overall, Australian dollar is still bearish from the point of the institutional trader side. So that's what you need to keep in mind. You know, institutional traders are basically saying that they are still have their short positions heavier than longs. So obviously by having these information available, this then helps me know that if I'm going to the position, if I'm trading Australian currency, I need to make sure I'm looking for shorts so that I don't go against the market. Because again, I'm not a market maker, I'm a retail trader. And retail traders don't have as much influence like institutional traders does. So it's very, very important where we can differentiate the differences and therefore we can always be on the right side of the market. So we can have a setup that's in line with what the institutional traders are doing, and we can also then make profits or find setups that can then give us a nice risk-reward ratio trade as well. So I'll give you guys another example. Let's look at the pound sterling as well. So this can give you an idea of another currency pairs sort of shorts. So we can see we currently have over 100,000 longs and we've got 68,000, just under 70,000 shorts as well. And the changes that have happened in the recent weeks, you can see 1,200 longs and 1,400 longs as well. So overall, the market is very, very strong in terms of long-term wise, but in the short term, we might see some bearish pressure ongoing, even though overall, looking at the higher time frame wise, we will see that the market is probably making higher highs or making higher price overall. In the short term, we might see a retracement or a pullback based on, you know, how the institutional traders are moving around the market. So again, these are the things that you guys can learn from. I think by implementing these simple strategies and fundamentals, that can help you with your trading, because the last thing you want to be doing as a trader is going against the market. Because like I always say, retail traders, we don't make the market. We just follow what's given in the trend, and then we then align our setups and our strategy with the market so we can then be on the right side. So when we take a trade, we are always most likely going to win with the market as well. So very, very important as well. So these are the main two websites, the main two fundamentals that I tend to apply. But if you guys want more breakdown of what kind of news and which ones are very, very important to look out for in terms of certain news and political news and fundamentals that are very, very important, are key to price action, comment below fundamentals and let me know that obviously you guys want more videos like this so I can go in more depth and break down which kind of news or fundamentals are very, very important to price action and how you can sort of apply these news to, you know, take a trade on a news trading day, which is, you know, something that's next level that, you know, if you don't have these understanding, you might not be in the best situation to do so. So if you guys want those kind of videos, let me know. Like I said, comment below fundamentals so I know you guys want more detailed breakdown on the fundamental side of the video. So yeah, but with that being said, again, that's the end of the video. But before you leave, please don't forget to like, don't forget to comment, don't forget to subscribe, and also all my links to my channels, all my links to my social media pages are below. Please follow my Instagram. I'm quite active on there. My Telegram is my main platform that I post all my setups and all my watch list that I'm looking at for the following week or for the following month or wherever it is. So I'm quite active on there, and obviously I'm interactive in my group as well. We currently have over 140 people in the group, and obviously I'm growing as well. So if you want to learn, if you like what I'm doing, and obviously want to be part of the community, feel free to join, as it's free of charge. It's a free community where you can share ideas with other traders as well. With that being said, don't forget to like once again, and it's been your boy Capitals, and I'm out. Peace.